Hello, good morning. Jayaram here. Welcome to Almus Market Morning. Markets had a good day and recovered a lot of recent losses, with investors shrugging off concerns about Omicron variant of the COVID. After the US medical expert quelled undue fears about the potentials of Omicron, yesterday British drug maker GSK also said an antibody-based COVID-19 therapy it is developing with Vir biotechnology was effective against all mutations of Omicron variant. US Nasdaq had a stunning 3% rally. MSCI All Country Index advanced 2.1%, which is the highest gain since November 2020. Higher taper fears have all but vanished from the market, which is awash with liquidity even without further QE. Market also seems to believe that even the tightening cycle in US is likely to be shorter than ever, as the Fed may be tightening into a potential slowdown in the economy. It was clearly a risk-on session for the markets, as the AUD rallied more than 1%, despite the RBI holding the rates, and fresh yen carry trades were also seen. Policy easing in China was a further shot in the arm for investors. Surprisingly, dollar hasn't made much gain despite a big move up in the yields. While two-year yield has shot up by 7 basis points yesterday and almost 0.25% since low of November 20, 10-year paper yielded 6 points higher with an overall increase of 0.15% from last week's low. During this period of yield rising, dollar index has actually fallen marginally from 96.65 to 96.25. Greenback also did not gain despite a big plunge in US trade deficit, which was the result of a big surge in exports. This only means that Greenback has already preceded the yield moves and also in a region where dollar bulls are hesitant to add longs. Technicals do show a good rebound potential for Euro and GBP from 1.12 and 1.32 respectively as we move towards the year end, retracing some of their big losses. Rupee has been a relative underperformer in the last few sessions, mainly driven by higher demand from FI and PSU banks, while supply is steady from exporters. With no big flow cited at the moment, only a return of fresh investment from FIs after a recent market correction can tilt the balance in favor of supplies. We have the RBI policy announcement at 10 a.m. today, and in my view, compared to the previous RBI policy, this meeting has greater market moving potential, and we remain alert for continued weakness in the rupee. More on what to expect from the policy, Pankaj will be highlighting. Have a profitable day.
Thanks, JK. Receding worries on Omicron pushes risk appetite higher, leading to rally in equity markets and treasuries. 10-year US Treasury has moved now closer to 150 and 2-year closer to 70 basis. 70 basis is recent highs. After getting a fear of higher rates and Omicron, S&P 500 fell a lot in previous days, but now S&P 500 is only dealing at 1.5% lower than the all-time high of 4687. Maybe these areas are a very strong resistance around 4640, 4650. We see whether it surpasses and make a new high. Asian stocks are also moving higher along with global equity markets. Yesterday and today, there's a testimony from cryptocurrencies firms. So top executive from cryptocurrencies in prepared testimony, they said that they will support clearer rules, but they will also highlighted that unnecessary onerous rule will stifle the activity, will push it away from US and may shift activity underground or maybe to the offshore exchanges. So basically they highlighted that the need of R is that we should be taking and regulating cryptocurrencies in much better way. Otherwise, US will be falling behind. Euro USD is basically now would be movement, or maybe the dollar index movement would be in next couple of sessions will be dependent on coming US CPI on on Friday, Fed outcome on next Wednesday, and ECB outcome on Thursday. So till that point of time, Euro might move between 1.1230 on a higher side, 1.1370. Today is RBI Monetary Policy meeting, and outcome would be around 10 o'clock. I expect RBI to raise reverse repo rate by minimum 15 basis point while keeping stance accommodative. They might increase a little inflation forecast and will maintain the GDP forecast. Why I'm saying this 15 basis point? Because by doing a continuous variable reverse rate repo, they have anyways taken a short-term rates higher. It will be better that they start aligning along with that short-term rates with the variable reverse repo rates. Another thing is all emerging markets have been in some form and fashion, except China, has created some kind of ammunition to deal tapering after November or December, or after December. Yeah, that's all from my side. Thank you.